To ADU owner, and today I'm going to tell you about how to do taxes on an ADU. Taxes are kind of a pain. They can be intimidating, and they are kind of a pain, but if you get the hang of it, it's really not that bad. First thing, I would advise you to get a good accountant, somebody that has quite a bit of experience with doing taxes on rentals. All kinds of people have rentals in this world, and so there's going to be a lot of people that have experience with that, but just get somebody good. Now, you don't have to pay $600 or $700 to get your taxes done. You easily can, and it's not a bad thing if you have somebody that's good, but you can usually find a tax preparer that's really smart. A lot of times for a couple $100, they'll do your personal and your business taxes. The next thing is you need to get organized. I recommend you do a ledger every month, and it's just going to have your income, and it's going to have your expenses. Now you need to keep track of, for taxes, you need to keep track of your leases, because they're going to show how much income you had. But also bank statements would show that if you're getting a direct deposit for your rents and stuff like that. So all those would be good paper trails, but keep track of those statements and things. Just put them in a box. You don't have to organize them, but just if you ever get audited, you want to have them around somewhere. Here's an example of a ledger. I just made this for an example. And you can see this is pretty simple. All it has is the month, then it has the income you brought in, and then it has I just have a couple expenses on here. Just whatever expenses you had that month, you just put it on there, and every page is a new month, and that's a good way to do it. And then you need to keep your receipts. Now, this is the actual ledger I do. This is not the way I do it. So I just have it in this envelope, and every time I have an expense, I put it on here. And then inside the envelope, I have my receipts and checks and things, my copies of checks. So that's not the best way to do it, but that's the way I actually do it for my rentals. Now, I'm going to show you. The next thing is, if you're bringing in like $18,000 over a year, that's okay. That's $1,500 a month in rent. So over a year, that's $18,000. The actual cash you bring in is maybe $15,000 because you had to pay your utilities out of that you charged to the tenant. You had to pay for that new dishwasher, whatever. So you knock down to like $15,000. Now on that $15,000, I'll show you in my example, you're not going to pay taxes on that whole $15,000 because there are other things that you can deduct. You're only going to pay taxes on, in my example, is $6,700. And if you're in a really low tax bracket, I'll show you on my screen. So this is how much we brought in. This is the actual cash we have in our pocket from our rental. So after all those expenses. But this is the IRS income tax that we're going to have to pay only on $6,700. On that $6,700, you're going to have to pay according to how much money you make total. In my example, I'll tell you, we only had to pay 6% on that. And the reason that is we have a bunch of kids, 6 little kids, and we have a modest income. So our tax rate is very low with that, with the standard deduction and the deduction for all the kids. They give you quite a bit for each kid. So for us, most people aren't going to have that, but we only had to pay 6% or $400 on our whole basement apartment, okay? Now, if you are a little bit towards middle class, you're going to have to pay 12% in this example, or $800. If you are even more towards middle class, you're going to have to pay 22% or $1,500 basically. So if you think about that, if you're well up into the middle class, you bring in $15,000 cash that you have in your pocket. The government wants 10% of that, and that's because of all your deductions, okay? Now I'm going to go over all those deductions, how that works, okay? If you look at this side, this is the Schedule E. This is the form. I have the bottom cut off. I shouldn't have done that, but this is the form that you fill out for your rental, okay? After you take all the information off your ledger, all your receipts, and then you put it in this form, okay? So it's going to have your name up here. Then it's going to have, this is A. It's got A, B, and C. So if you had 3 rentals, but if you have just one ADU, you're going to put the address of that ADU there, okay? Whatever that is, okay? And then the next thing you want to pay attention to is down here, income. So like in our example, we had $1,500 a month, so that's $18,000 in income. That'd be the top line, A, okay? And then it has, I'll go through these, they're in alphabetical order. Advertising, auto expense, cleaning and maintenance, commissions, insurance, legal, management fees, and so on and so forth, okay? So this is the form that goes in your 1040 tax return. This is the form where it is. Now I have it in the spreadsheet and it's a little more clear and I want to show you this. And I have things that are yellow and things that are orange, okay? The orange things, you'll notice, those are most of the big numbers. But these are things that you would have had to pay anyway to own the house. So you rent part of the house and you get to deduct that money, okay? And that's how $18,000 turned into $6,700 that you pay tax on. $18,000 top line income, only pay tax on $6,700, okay? That's how that works, okay? Because you got these orange things, okay? If you look at these expenses, I'll go through the big ones. I ordered them from no expense to bigger expense in the example, okay? So the biggest one is mortgage interest paid to banks, okay? $6,700. How did I come to that, okay? In my example, I have a house and I paid $20,000 in mortgage interest. That was a big number 10 years ago, but now if you have a house that's got a $500,000 loan or even $300,000 loan, you could pay close to $20,000 in interest, okay? Interest has gotten big, okay? So I say, well, what I did was I said the basement apartment is like a third of the house. I live in 2/3, the basement apartment's a third. So I divide that in 3, that's $6,700. So already that's more than a third of the money you brought in, okay? It's deducted, okay? This depreciation expense, I'm not going to say much about that. That's another expense. That's a big one, $5,500. That's one that you can take. What depreciation does is it basically defers tax. So I say, while I have this huge mortgage payment and paying my house off, I'm not going to pay as much tax. But then when I sell the house, I'm going to have to pay a huge chunk of tax for all those 20 years that I was paying it off. Okay, so that's what depreciation does. Makes your taxes quite a bit more complicated. And if it's just your house, I probably more than likely not recommend it, but it's something to talk to your accountant about. It is something you can do, but it makes it more complicated, okay? So that's your next biggest one. Your next biggest one is utilities. I have $1,600 here. It should probably be more for the year. So $1,600 would only be about $130 a month and that would count utilities and internet, okay? Now that's yellow because most of those things, a lot of that money you'd have to pay anyway. You have a house, you have to heat it, you have to cool it, you want to get a good internet service, $100 a month. So if you get, for instance, that internet service, you're paying $100 a month, you're letting your renter use part of it. So you're charging your renter 50 of it. So that is an expense that you wouldn't get to take normally. And the big one that you wouldn't get to take normally is the mortgage interest and like the property taxes. Those are big expenses that because the standard deduction in the United States is $29,000 for a married couple right now. You're probably not going to get to $29,000. But because you have an ADU, you turn that into a business and you get to take that expense. So it's a way that people with ADUs get to take more tax deductions. Let's see some of these other ones. So taxes, that is the portion of the property tax. So on our house, we pay about $2,000 a year property tax. Utah's pretty low. If it was in the Midwest somewhere, it'd be a lot higher. But anyway, $2,000 a year. So divide that in 3. So $6,700 deduction, okay? Another one is homeowner's insurance. You can deduct some of that. So anyway, so all these things, I think the government is pretty fair. they say, you're renting your house, you're making it into a business, but we have all these deductions you can take. Now, where you'd have to pay a lot more tax is if you had a house paid off. Say you're older, retired, whatever, you have your house paid off, you put that on your taxes. You don't have any interest deduction, so that's a big one. So you're going to have to pay more taxes. But think of it this way. You're making money on a house and you have very little expenses, so it's kind of fair to pay more taxes at that point. So anyway, I think the IRS is kind of fair in the way they do it. It does complicate things, but I hope this helps you and makes you feel a little less scared as you get your taxes ready for your ADU. Again, it's Schedule E on the 1040. And you're probably, once you have an ADU, you're more likely not going to be able to do your taxes yourself on a 1040 EZ and do it for free, or TurboTax. You're going to want to get an experienced professional to help you. But again, keep those records every month. Keep receipts. Get an experienced professional, and it's really not that bad. And like in my example, I bring in $15,000 in cash after my expenses, and I only pay $400. That's because I'm poor and have a ton of kids. So anyway, I hope this helps, and appreciate you, and wish you success on your ADUs. And again, this has been Paul with ADU Owner. See you next time.